from there and connect with Ayaz. And Ayaz Motiwala needs no introduction. He is one of the finest consumer analyst and senior fund manager with Emerging Asia Fund Ventures now. Ayaz, good morning. Thank you for joining us. For a minute, let's wear your consumer analyst hat, which you've looked at consumer companies threadbare in your earlier avatar. What are the trends you're getting about the Indian consumer space?
Yeah, good morning. Like your colleague just mentioned, and I'd probably repeat some of those points as starting up, and then add a few other thoughts. But clearly, if you had met up with companies back in the quarter before demonetization, I mean, some of these companies that you talked about, Godrej, Dabur, etc., all these companies, the whole aggregate, they were all seeing a fairly decent recovery and getting closer to double-digit volume growths, which was struck suddenly by the demonetization and a pull down by the trade to figure out new way to do business, because the traditional way of doing business with the cash component clearly was not the way the business was going to be done going forward. So I think the trade took 3-6 months to get settled down, which is why you had this Q3, Q4 of FY17 being quarters of duress and numbers being quite meaningfully depressed for most companies as an aggregate. And then came in this pre-GST quarter where again people did understocking because they had old stocks to run down and pipeline clearing, etc. So this has been going on for let's call it a year. And if you were to roll back further to that period, which is again very important in the context of rural, you had possibly accepted by everybody from the government to other departments fairly big kind of drought-like situations for 2 years on the go, and that took away the purchasing power from the rural audience, which now finally seems to be coming back as we come into the present. So we've had 2 quarters after GST. We've had a decent sort of monsoon in the last 2 years, and things seem to be sort of getting back on track. So I'm hoping that as we look few years ahead, the 2, 3, 5% kind of volume growth situations across the board, as an aggregate again, will be a thing of the past, and hopefully we will see quite meaningful improvement in volumes firstly.
Why do you think there could be a pickup in volumes? Because most of the large consumer categories now are fully penetrated. The Levers and the Colgates of the world, they are not innovating at all. I mean, the same Purana Sabun, the same Purana toothpaste. So for volume to come back, either you need very strong penetration, which already has happened, or strong innovation, which these guys are not doing.
I mean, look, so I've had this thought on it maybe even 15 years back. Let's say that Colgate is, maybe done a Colgate Total, and what else are they doing? And from a herbal perspective, they'll put in a clove and they will do some other, sort of mint, etc. But if you were to think about it on a practical basis, Nikunj, is, the habit of brushing or sort of body wash or washing clothes, there is not a dramatic change in the current format of it, unless you have using no water kind of washing situation and such tablets which come out, you push them in the washing machine, and that's another extreme of life. If you look at the mass market consumer product business and these 2 categories that you mentioned about, it is still a basic staple. I mean, you need to get people to brush and brush more, and then brush with better toothpaste, and that is what they are tasked with. Now, are they doing a phenomenal job at it? I mean, they've done a pretty decent job. They've been around for 50, 100 years, both of these companies. I guess in the interim, they have been challenged, and that is what the lack of innovation can be called, where you had a big wave of this herbal wave of Patanjali, etc. more recently, and sort of vegetarian wave in the past, where you had brands like Ajanta, etc., coming in. So the this sort of minor tinkering and skirmishes will go on, but the big picture remains that while you call it that, yes, there are indeed penetrated at a very high percentage number, there is still an opportunity to grow volumes in the mid to high single digits. Now, mind you, the more interesting point for some of the other companies, and that's why you can't talk of this as an aggregate, is what do you do with that free cash flow? So some of these companies have been paying out, fairly fat dividends to shareholders, including their parents, and repatriating the money back home. Whereas the homegrown Indian FMCG companies have used that cash both to grow into new categories in India and do some international acquisitions. So I think that is one of the stark sort of differences that one has observed over the last 15, 20 years of looking at this space, where if you were to put hard numbers on compounding of these large multinational giants that you mentioned versus 3 or 4 of the Indian companies, you'll see a stark catch up by these guys, where they were 1/100th the market cap of these companies, and they're probably now getting very close, and they're probably 1/5 to 1/10th kind of numbers now. So that's because they've got plain underlying growth and profits, and they've allocated into interesting new categories as well, versus those companies where the parent does not have some of these localized categories or done innovation to that quantum and have affected growth.
So since you do believe, Ayaz, that there is still value on the table, we are yet to see peak volume growth from most of these FMCG majors. Where within FMCG do you find value where our investors and viewers who are watching this show can still buy, and there is still money to be made in the longer term?
No, so the issue that we've always talked about on your channel as well is, I think, if you are looking at an apparent value and saying we want to get a consumer company 1 year forward, which itself is a term propagated, let's say, by Wall Street, then you probably will not find conventionally value, which is a fact. And so you'll have to look at a little ahead, or you'll have to look at companies which are gestating other businesses which will come to bear. And contribute to revenues and profits as they go along. So you'll have to look at them on a disaggregate fashion, unfortunately. So doing sector comparison in consumer products in India is clearly hazardous, because you have companies which have unique portfolios. They have unique situations, like you highlighted. A couple of them actually had negative volume growths. In this quarter or the last year was a complete recess for some of the large companies. And on the other side, you had companies in the QSR space, etc., where they were so beaten down for 3-4 years of consumption that they're reporting 25 and 30% same store sales growth. So I think I unfortunately not sort of dishing out an idea or two here. But as an aggregate, it's obviously tough to put a comparison table and say these companies trade at this time, these companies trade at this time, so this is attractive. The more interesting bit would be to spend time on companies, what they have done with their money in the last 3-5 years, and look a little beyond the 12-month period is what I would say.
That indeed is the case. So give us your own sense.
Yeah, so let's, we've talked about some of the real estate sort of, mall management companies, right? Now, these companies have created, good sort of assets, which have real business to be done. And only after they go through the 3 or 6 year cycle that you start seeing rental rates creeping up to what the core asset sort of gets you to. And that is the kind of thing where I'm saying that you'll have to look out for companies which have either ready land, or they have a ready distribution infrastructure, or a brand on which they can build adjacencies and grow the business, and and try and get into some of these names as such. So I think the closest to coming to a single stock, not specifically sort of talking about, is these kind of businesses where we are very interested in, and we own where we own positions in.
So Ayaz, broadly, what has been your activity in last 35-40 days? Are you buying more? Are you selling more? Are you bringing down the number of stocks which you own? Are you increasing the concentration? Are you increasing the width of your portfolio? What I'm trying to understand is that next 12 months, next 18 months will not be easy to predict, whether it is crude or elections or the way earnings would move. So how are you making sure that A, you lose less and you make more gains?
That's a very good question, and I appreciate you asking this question. So I mean, somewhere in the start of the year itself, the calendar year, there was some signals you could articulate that reaching finally the US 10 years sort of reaching the 3% threshold number, or the S&P doing some break from the 200 DMA. These are kind of technical or external numbers, or the crude oil, which has a big bearing on India, or the regional flows of money, or finally foreign exchange sort of rupee depreciation hitting us straight in the face. If you put all of these together, clearly the point that you make, this is a year to hunker down, try and protect the last year's gains that have been made. Indian small cap index in dollar term made upwards of 55-60%. So that would be a big task for people like ourselves to try and protect from our portfolios from a dramatic giveaway or a give back of those gains made as one starting point. And in that context, we've done all of the things that you mentioned. We have actually taken profits in some names. We have cut down the names as such and raised cash. So we've done all the things in this quarter, which has been a very interesting quarter. And if you one want to take a constructive or a view and be objective about it, I think I've been mentioning this, but I mean, 9 years has been too long for this sort of free money era, and maybe it's ending. It's clearly articulated by the US that they're going to be, raising rates through the year, and also by the market participants who are building that in. So one of the big manifestation of that has been, clearly financial asset price inflation, and what you struggle with often, Nikunj, is, equity valuations and valuations of sort of more consumer pharma type companies or IT in India. So I think that is an area to be wary of. That's an area to be watchful of as we roll forward for the next 12 months. Are we paying up too much in our existing names, and should we be thinking through that, where earnings may not come through and disappoint? At the same time, should we be also watching out for for newer stocks that come up in front of us? What kind of multiples should we be paying? So I think that is going to be the activity through this year.
So Ayaz, give me a money making idea, somewhere you think there is visibility for earnings growth for next 2 or 3 years, and I'll keep it very moderate here, 15 to 18% or 18 to 20%. What happens to stock today, tomorrow is a function of flow, sentiment, technicals, crude, A, B, C, a lot of factors. But if earnings are there, we both know that the stock will eventually move higher and align with earnings. What is important is to find out a company or a business where you think earnings visibility for next 2 or 3 years is visible.
Yeah, so I honestly, I wish I had that name to sort of throw at, or two, in fact. But I would say the time we spent on the consumer sector trying to discuss a few of those points. If you were to give me the liberty to say again on a broader basis, but I think 3-4 of those names there will surprise people on the quantum of growth that will come in over this 2 to 3 year period that you give a latitude for. And I think that should be a good space to be in. Early signs of volume are actually showing that. And, you could have a tobacco major trying to, gestate many businesses. I mean, that's not very it's not a, sort of rocket science. They have created a 10,000 crore plus FMCG business. It's widely known. They have a hotel business. I mean, who knows? They could have a, sort of corporate action where they create 2 or 3 businesses out of it, and suddenly you have a value unlocking situation coming out of that. So we'll have to look at both the large and the smaller names. But yeah, I would be definitely inclined to be quite positive on this space with these levels of valuations, which have been troubling market participants. But hopefully, I think the change is around the corner.
I appreciate your time and glad you could join us.